Welcome to the deep dive. We're jumping straight into the gaming industry, looking ahead to 2025.
Yep, got a whole stack of stuff to go through today.
We really do. We've got articles on play-to-earn economics, GameFi security, which is crucial customer retention strategies, and, the overall state of gaming and influencer marketing trends for next year.
It's a lot to unpack. Our mission really is to pull out the key insights, maybe some surprising facts, just to give you a clear picture of how this whole landscape is shifting.
Exactly. It's moving so fast. Okay, so let's start big picture, the global player base.
Oh, it's just
Oh,
huge.
absolutely massive. Newzoo's thinking, what, 3.76 billion players by 2027? DFC is even more bullish, maybe 4 billion?
4 billion.
Yeah.
But the growth isn't even everywhere, is it? That's what I found interesting.
No, no, definitely not. Asia Pacific is still the giant, like over half the players growing steadily. But the really fast growth, that's happening in places like the Middle East and Africa, Latin America, mobile-first regions.
Right, 16% in MEA, 10% LATAM, much faster than North America or Europe. And it shapes things. Mobile focus often means different kinds of games, different monetization, more accessible stuff, maybe shorter play sessions.
It makes sense. And it's not just players, it's games too. Steam.
Ooh,
Wow. The number of releases just keeps climbing.
doesn't it? Since the mid-2010s, it's exploded.
Yeah.
And a 25% jump just in 2024. That's wild.
That's a ton of games competing for your attention.
It is, but it also means the development scene is really active, right? And it's fueling Steam's revenue, was it $10.8 billion in 2024?
Yeah, mostly game sales, but in-game purchases are a big slice
A
too.
growing slice.
Yeah.
Shows how games keep making money after you buy them.
Okay, so lots of activity, but funding for studios. It seemed a bit uneven. Like Epic Games got that huge $1.5 billion deal,
Okay.
but then the next biggest deals were way lower, like $157 million down to $30 million. What's that tell us?
Good question. Could be a few things. Maybe investors are still willing to bet big on the absolute top tier, the established giants.
Like Epic.
Yeah. But maybe they're being a bit more cautious, more selective with newer or smaller studios.
Hmm.
Or focusing on specific niches, maybe even Web3 stuff, which some sources mentioned.
Yeah, Web3 keeps popping up. Okay, what about mobile? Still a beast, I assume.
Oh, yeah. Top games by spending in 2024. Honor of Kings was #1. Then Monopoly Go. Royal Match. Familiar names like Roblox, PUBG Mobile also pulling in big bucks.
Interesting mix. Honor of Kings, still dominant. But downloads are different, right? Which games are actually getting the new players?
Good point. Downloads paint a slightly different picture. Roblox was way out in front, 219 million downloads. Then Block Blast, Subway Surfers, Ludo King, Pizza Ready also huge.
So Roblox still bringing in massive new audiences. Fascinating.
It shows that what makes the most money isn't always what's attracting the most eyeballs initially.
And quickly on consoles, in Europe at least.
Yeah, the big new releases still dominate. EA Sports FC, obviously. Call of Duty, Black Ops 6, Helldivers 2. Those kinds of anticipated titles really moved units.
Okay, so massive industry, growing fast, lots of regional differences, tons of games, mobile still huge. Sets the scene nicely.
Definitely. And it leads us right into one of the big shifts. Play to earn, or P2E.
Right, P2E. Let's break that down. For anyone maybe not totally familiar, the basic idea is you play a game and you get rewarded with actual valuable stuff, right? Like in-game money or unique items, often NFTs.
Exactly. And the key thing is your ownership of those digital items is recorded on a blockchain. It's yours, provably.
But it's not just about the players, is it? There are other groups involved.
For sure. You've got the players obviously wanting fun and maybe some earnings, then builders, people creating stuff within the game, the developers making the game itself, investors putting in capital, and NFT collectors.
Ah, yes, the collectors. And they're looking for more than just price appreciation, according to the sources.
Oh yeah, they're digging into project hype, sustainability, actual utility for the NFT in the game, decentralization.
Revenue models, rarity, income potential, it's a whole checklist.
It really is. It shows how complex these P2E ecosystems are becoming. Which brings us to market design.
Market design. Explain that.
Think of it as the fundamental rules the developers set up first. Like, can players create their own stuff to sell that's user-generated content, UGC, or does everything come from the devs? These big rules kind of set the stage for everything else, like how rewards work or how you control inflation.
Okay, let's stick with UGC for a second. Allowing players to create and own things sounds great for creativity. But what are the downsides?
Well, the big one is protecting ownership. Intellectual property, right? If someone spends ages designing an awesome sword NFT, What stops someone else from just copying it?
Ah, the free riding problem. Yeah, I can see that killing motivation fast.
Totally. If your hard work could just be ripped off, why bother creating?
So how do games deal with that? The sources mention gatekeeper algorithms, like automated checks for
Yeah,
copies.
that's one idea. Sounds good, but technically really hard to get right. Like, how similar is too similar? Slight changes.
Tricky. What else? Governance? DAOs?
Right. Using decentralized autonomous organizations, DAOs, the idea is the community, maybe token holders, could vote on whether new UGC meets certain standards, preventing blatant copies.
So different games are trying different things. Some are more rigid, like Alluvium or Axie.
Where player creation is maybe more limited. Others, like Dark Forest, are called closed. And some, like Guild of Guardians, are aiming for more community-led growth. It's still experimental.
Finding that balance between freedom and protection seems key.
Absolutely essential for a healthy UGC scene.
Okay, let's talk value. How it's made, where it goes sinks, they called it, and how it gets distributed.
Yeah, value is the core thing, like in any economy. It can be currency, tokens, NFTs. And there's a difference between new value coming in and value just circulating around.
New value, like Gold Fever issuing its NGL token so people can buy mining claims. That creates new activity.
Exactly. That injects fresh potential into the economy. Circulating value is just players trading existing stuff amongst themselves. You need both.
This feels connected to the whole pay-to-win versus pay-to-play thing. Big debate there.
Huge debate. Pay to win lets you buy power, basically.
Mm.
Good for revenue from whales.
Yeah.
Big spenders.
But can feel unfair to everyone else.
Right. Pay to play might require an upfront investment, could lead to a more balanced economy, but maybe feels less like a game and more like, well, an investment.
Are there middle grounds?
Some games are trying. Illuvium, for example, has different arenas. One for ranked play, maybe more skill-based, and another Leviathan arena where maybe spending gives you more of an edge, trying to cater to both sides.
Ultimately, though, the game itself has to be good, right? Not just some...
Some pump and dump scheme. Yeah, exactly. Sustainability comes from quality gameplay, not just hype.
Okay, network effects.
Yeah.
How does more people joining make these P2E games stronger?
Several ways. More players mean busier secondary markets for items, making those items potentially more valuable. That draws in more players.
Right.
Classic network effect.
And those crypto guilds you mentioned earlier.
Yeah, guilds. Groups pooling investor cash to buy assets, then lending them to players, scholars. That adds a whole other economic layer, driven by network growth.
Plus, in UGC games, more builders means more cool stuff, attracting more players.
And developers fuel it with NFT pre-sales, bringing in early believers. Even speculators just buying tokens can drive up demand and perceived value, which benefits actual players too sometimes. It all feeds itself.
It really is like a mini economy.
Which brings us to monetary policy, managing inflation and deflation in a game.
Yep. Just like a central bank worries about it, too much inflation, if tons of new game currency floods the market, devalues everything, kills the incentive to earn. Too little supply deflation and nobody wants to spend.
And Axie Infinity is the classic example here.
It really is. They had huge demand for their Axie NFTs, which made their SLP token really valuable initially. Maybe too valuable, potentially deflationary.
So they had to tweak how you earn SLP, how new SLP is created.
Exactly. Constant adjustments to try and find that balance. It's ongoing economic management. Wow. Okay, underpinning all this are the NFTs themselves. ERC 721 versus ERC 1155. Quick difference.
Yeah. ERC 721 is mostly for truly unique, one-of-one items. Think a specific piece of art or a legendary hero. ERC 1155 is better for managing collections where you might have, say, 100 identical swords or stacks of resources, more efficient for batches.
Gotcha. And the metadata is crucial. What's that storing?
Metadata is all the descriptive info attached to the NFT. Its history, its stats in the game, what it looks like. It can be static, never changes, or dynamic, maybe updated by external data feeds called oracles,
Yeah.
or semi-dynamic.
Like the Sorare cards, with player stats, club, rarity, season.
Precisely. All that detail is in the metadata, or Ember Sword linking an item back to the land where it was crafted via metadata so the landowner gets a cut of future sales. That creates really interesting economic links.
Super interesting. And we saw tons of examples. Axie's AXS and SLP, Alluviums, Alluvials and ILV, Gold Fevers, NGL and claims, Guild of Guardians Heroes, Thetan Arenas, THC, THG, Sorare cards, League of Kingdoms land, Dark Forest assets, a real variety of approaches.
Absolutely. Everyone's experimenting to find what works for their specific game and community. Is a space to watch.
Okay, let's pivot slightly. Away from pure economics, towards just keeping players playing. Customer retention seems like a huge challenge.
It is, especially with so much competition. Losing players is easy, keeping them is hard, and expensive to replace them.
Right, the classic business wisdom. Cheaper to keep a customer than find a new one. Like 60–70% chance of selling again to an active player versus maybe 5–20% for a new prospect.
Exactly. Loyal players spend more, they tell their friends they need less support. Loyalty really pays off.
But just having okay customer service and throwing out a few discounts isn't cutting it anymore, apparently.
Nope, players expect more. The sources suggest a two-part key. First, consciously engender habits early on. Get them playing regularly from the start. Second, back it up with really top-notch customer service when they do need help.
Engender habits. How do
Yeah.
you do that?
Well, past behavior predicts future behavior, right?
Right.
So get them to play multiple times quickly, reach out regularly, maybe personalize messages, offer specific rewards for coming back soon, make those early experiences really positive and smooth.
I liked the gift basket idea, just sending unexpected goodies to players who've been away for a bit.
Yeah. Little surprise, free currency, maybe an exclusive item, even a key for another game. It feels less like marketing and more like a nice gesture. Can be really effective at pulling people back in.
Makes sense. Okay, quick detour into security. Web3 gaming, GameFi? Because there's real money involved, it's a target, right?
Oh, absolutely.
Yeah.
Anytime finance gets involved, the bad actors show up. It's inevitable. GameFi is basically fintech with a gaming front end, so security is paramount.
And the risks fall into two main buckets, on-chain and off-chain.
That's the main distinction. On-chain vulnerabilities are flaws within the actual blockchain code, the smart contracts themselves. Off-chain is everything else, like website security, user account security, etc.
Let's focus on the on-chain stuff. Smart contract bugs. Where do those usually come from? Is it just sloppy coding?
Often, yeah. It boils down to developer error. Simple programming mistakes, maybe the logic of how the contract works is flawed, sometimes the whole design is weak, or developers just aren't fully aware of the latest security best practices for blockchains.
And these aren't trivial errors. They can lead to actual theft.
Definitely. Theft of funds or valuable NFTs, manipulation of the game's rules or economy, or just completely breaking the game. Serious consequences.
A stark reminder about the tech risks underneath all the cool gameplay.
For sure. Building secure smart contracts is non-trivial.
Okay, shifting focus again. Influencer marketing. Sounds like it's becoming even more important in 2025.
Seems so. Especially with changes in traditional games media, like layoffs affecting journalists, influencers are stepping into that gap as key voices, the intermediaries between publishers and players.
And the market size is just exploding, projected $32.5 billion by 2025, growing over 35% a year. Yeah, the growth is insane. It's blowing past traditional ad spend growth. Shows where the marketing dollars and the eyeballs are going.
So when brands pick influencers, what are they looking for most?
Top criteria seem to be actual engagement clicks, comments, shares, and the influencer's content type or category. Does it fit the game? Views and reach are still important, but maybe secondary to genuine connection. Sales generated is also tracked, of course.
So it's a balance between numbers and just fit.
Exactly.
Yeah.
And platform-wise, Instagram's still the king.
Apparently so. 90% of brands plan to boost their Insta presence. It drives action. But TikTok is huge too, obviously. YouTube, Facebook, even LinkedIn for some B2B stuff.
So a multi-channel approach is probably best. Hit different audiences where they are.
Yeah. And this marketplace influencer trend is interesting. Like in China, Douyin, Taobao Live, merging entertainment and shopping directly.
Right. Social commerce, it's huge there. Influencers basically hosting live shopping shows. And that's spreading globally. Makes the path from seeing something cool to buying it very short.
We're also seeing a focus on smaller influencers, nano and micro.
Definitely. They might not have millions of followers, but their audiences are often super engaged. Like 3–6% engagement for nano influencers, which is way higher than mega influencers typically get. Better click-through rates too.
So maybe use big names for reach, but smaller ones for real engagement and trust.
That seems to be the strategy. A mix is good. It's part of a bigger shift, really away from just chasing raw numbers, quantity of traffic.
But towards quality of influence. Authentic content, actual engagement, positive sentiment, driving real conversions.
Exactly. Building lasting loyalty, not just fleeting attention. Luisa Girardello, an influencer marketing manager quoted in one source, really emphasized this. She thinks micro-influencers will dominate because of that authenticity and engaged community feel.
She also mentioned short-form videos staying dominant, reels, shorts.
Yep. And she had a word of caution about AI content too.
Oh yeah, what was that?
Basically, don't over-rely on AI to create influencer content. It might scale things up, but you risk losing that vital authenticity that makes influencer marketing work in the first place. People connect with people.
Good point. Need that human touch. We saw some cool campaign examples too. Paul World's huge launch.
Driven by TikTok and streamers getting early access, Silent Hill 2 building hype with streams and sending out physical gifts to influencers.
Black Myth. Wukong getting a boost from XQC revealing it. And Civilization 7 doing that live Civ World Summit with influencers playing against each other hosted by a Civ YouTuber.
Data McWhiskey.
Yeah.
With Twitch drops for viewers too. Really creative ways to leverage influencers beyond just a sponsored video.
Shows how sophisticated it's getting. Okay, last big topic. DAOs. Decentralized Autonomous Organizations. How do they fit into GameFi?
DAOs are basically like digital co-ops run by code, by smart contracts on a blockchain. In gaming, they offer a way to give the community, the players, real decision-making power over the game.
So instead of just the developers calling all the shots.
Right. The community could vote on things like game updates, new features, economic changes, treasury management. It's about decentralized governance.
And the key principles are transparency. Everything's on the blockchain, and inclusivity, trying to give everyone a voice.
That's the ideal, yeah. Empowering players to actually shape the virtual worlds they spend time in. Give them a real stake.
Sounds good in theory. Are there challenges?
Oh, definitely. Getting broad participation, avoiding whales or small groups dominating votes, making the voting process user-friendly. These are real hurdles. But people are working on solutions like better incentive mechanisms.
So potentially a more democratic future for game development.
Potentially, yes. It allows players to be more than just consumers. They could be contributors and stakeholders.
Okay, wow. We covered a lot. Bringing it all together, the gaming world of 2025 is, well, it's buzzing. Massive growth, these new P2E and UGC models, changing the economics, the constant challenge of retention, critical Web3 security issues, influencer marketing getting smarter.
And DAOs throwing in this whole new governance layer.
Yeah.
It's incredibly dynamic. And everything's connected, right? P2E needs retention and security. Influencers drive adoption of these new models.
Absolutely. So maybe a final thought for you to ponder. As all these lines keep blurring, playing, earning, creating, governing, what happens next? Where do the boundaries completely disappear? And what totally new kinds of opportunities or maybe challenges pop up that we haven't even thought of yet?
Yeah, that's the big question, isn't it? What does the future truly look like when these worlds become even more integrated? Definitely something to keep an eye on.
It is indeed. Well, that's all the time we have for this deep dive. Thanks for joining us.